Firstly, just let's look back at the economic data out this week. Manufacturing obviously surprised to the downside, coming in at 1.4% growth for the month of September. Strike action having a big impact on that number, but we've got to look at the reality that this is closer to the base number than what we've seen for some time.
Yes, I think it's reflecting obviously the same stats you can see in most other economic stats. Third quarter showing not too positively in terms of economic, it will filter through to economic growth for the third quarter as well. But in general, I think the sector will obtain about a 3% average for the year compared to last year, 1.8%. So either way, it is still an improvement of what we saw last year. The trend might just be a bit slower.
And from the mining perspective?
The mining actually surprised upwards. I think it's around the 12.1%. And I think mining is staying very volatile, but the trend definitely was upwards, slowing down, even though if you look at the trend, you would see there is a slowdown there. But in general, once again, a great improvement to what we saw last year.
Looking at retail sales coming out next week, what is your guess on that front? Are we going to see it disappointing on the downside now that we've clearly got the World Cup effect out of the way?
Well, I hope not. Expectations at the moment from our company is around 4-something percent, 4.5, 4.9, I think. And it's obviously a slower increase again, but hopefully we won't see such a large disappointing number in that sector as well.
And then Merina, looking to the MPC. That'll be the big event next week on the local front, and the market is pricing in, as Bridget Taylor was saying a moment ago, 100% chance of a rate cut, although there are economists out there saying that potentially we should hold now and only cut in January.
Yes, I think if we look back to a few meetings before where we expected a cut and it didn't happen, and it was based on the volatility of overseas markets and didn't know what's going on in the market. So, and that's still the case, I think, now. But even if you look at our local economy, there's so much reason for a cut. Inflation being extremely low, and therefore our company view as well, a 50% basis.
Do you think that inflation is going to test the bottom end of the inflation targeting band, below 3%? I know if you strip out administered prices, you're sitting at 2.6% at the moment on CPI.
Well, I think CPI has surprised us on the downward side again. For it to start increasing now, I think we've sort of got used to it, that every time it's a bit lower than we expected. So yes, perhaps I think there's a chance, but if it would happen, maybe just by 0.1 percentage points.
And the rand, obviously that's key to the inflation outlook. If we see a strong rand, it is going to impact inflation to the downside.
Definitely.
And that's really what your argument has to be. There are a number of economists saying second half 2011, we're going to see the rand trending back to 750. Is that in line with your view?
Well, I really, at this point in time, I don't know how anybody could actually call that. But really, if this situation overseas is going on, we have QE2 coming through by June as well, lots of QE2 coming through, the rand will stay strong. And as long as the rand stays strong, I'm saying around 7 rand to the dollar, maybe even stronger, yes, inflation will stay low.
There's also much debate in economic circles around whether there's a potential bubble forming in emerging markets. Do you have a view or a strong view on potential bubbles?
I'm afraid about bubbles. That is a risk that we look at, especially because there's such a lot of money flowing in now. I think that any real shock that might happen from overseas, the money will just flow out and it will be a shock to the rand. But I don't see the situation overseas changing as much. We've seen now that overseas banks and big companies get saved when they're in trouble, and that would continue, and that means money will still be flowing into our country.
The risk of that money flowing out, are you referring to some international event that heightens risk aversion?
Yes.
And just sees everybody running for the hills?
Yes.
But where are they going to deploy that money?
You know what, I think at the beginning of this whole crisis, I was actually surprised to see money flowing to America. I couldn't really understand how people were still doing that. But in times of crisis, people sort of go
back to the US dollar.
Yes, and they go back to the dollar, they go back to the gold, and that's what we've seen now. I think while things stay relatively stable, that money will flow to South Africa and other emerging countries.
Merina, thank you.